Ladies and gentlemen, good day and welcome to the India Pesticides Q3 FY22 earnings conference call hosted by Dolat Capital. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Arshid Joshi from Dolat Capital. Thank you, and over to you, sir.
Thanks, Aman, and good afternoon, everyone. On behalf of Dolat Capital, I would like to welcome all participants to India Pesticides Ltd Q3 FY22 earnings conference call. We would like to thank the management for this opportunity to host this call. Today, we have with us the Chairman of India Pesticides Ltd, Mr. Anand Swarup Agarwalji, the CEO, Mr. D.K. Jain, and the CFO, Mr. S.P. Gupta-ji. Allow me to read out the disclaimer for the safe harbor statement before starting the call on behalf of the management. During the call, we can make forward-looking statements considering the environment we are in today, which obviously carry a risk in terms of uncertainty, due to which the actual results could be a little different, and we do not undertake to update the statements periodically. Without any further ado, I would like to hand over the floor to Mr. Anand Swarup Agarwalji, the Chairman of India Pesticides Ltd, for his opening remarks. Post that, we'll also have opening remarks from the CEO and the CFO, and then we can have the floor open for a Q&A round. Over to you, sir, and thanks a lot.
Hello. Thank you, Archit. Good afternoon. Good afternoon, ladies and gentlemen. I hope you and your family are staying safe and healthy. I take the pleasure of welcoming you all for the Q3 FY22 earnings conference call of India Pesticides. I hope you all had the chance to look at the financial statements and earning presentation uploaded on the exchanges and our website. During the quarter, our profitability growth momentum continued, backed by our efficient business operations and unique product offerings. During the quarter, we launched one new product which received overwhelming response, as well as for the other product launch in the first half of the fiscal year continued to. Our R&D team and customer acquisition team is working to identify future pipeline of product offerings which can further add significant value to our offerings. Presently, we have 5 upcoming products in pipeline and about to be launched by Q2 FY23. During the quarter, we further increased our Sandila plant capacity by 500 metric ton. Our progress of the ongoing expansion projects is as per timeline and as per our expectations. We are confident that our enhanced capacity coupled with our new products launches will continue to drive profitable growth for us in the near to medium term. Going forward with portfolio of distinct products, we are confident of enhancing shareholders' value and to achieve our long-term goals. Thank you. Now I will hand over the further presentation to Mr. D.K. Jain.
Thank you, sir. Good afternoon, ladies and gentlemen. I thank you for taking out time to join this earning call for quarter 3 FY22. During this quarter, we continued our journey of product development and customer acquisition. We launched one new product herbicide during this quarter with capacity of 500 metric ton per annum. Also in January this year, we have soft launched one insecticide and one new herbicide is proposed to be launched by next month. Further to this, we have 3 products in pipeline which will be launched in the quarter 2 of financial year 23. Capacity expansion at Sandila and Hamirpur are very much in line with our expectation, as Anandji said. Also, we have taken possession of Hamirpur land for our Unit 3 and are in the process of making application for environmental clearance. During 9 months, we invested ₹55 crores in capex for expansion at Sandila plant and soft launched 1500 metric ton capacity during this 9 months of financial year 22. increasing our overall technical capacity to 21,000 metric tons. We are targeting overall 9,000 metric ton capacity expansion at Sandila facility. Further, we expect to invest rupees 15 crores in capex in this quarter 4 financial year 22 at Sandila, and as informed earlier, 70 crores capex is planned for next year financial year 23 at Sandila unit. We remain committed to deliver continuous sustainable long-term growth with R&D efforts at the core, leading to continuous innovations in product as well as in process optimizations. During the quarter, same was reflected in our performance and will continue improving with our upcoming initiatives. With this, I would like to pass on to our CFO, Mr. S.P. Gupta, to walk us through our quarter 3 financial highlights. Thank you so much.
Thank you, sir. Good afternoon, ladies and gentlemen, and thank you for joining the India Pesticide conference call to discuss quarter 3 financial year 22 results. India Pesticides margin and profitability continued to remain strong with our efficient asset utilization and efforts to further optimize our processes. We are also thankful to our customers who have supported us by absorbing the increased raw material cost. Now taking you through the financials, the total revenue stood at 548 crore as against 520 crore in 9 months financial year 21. That is a by growth of 5.3% and 191 crore in quarter 3 financial year 22. EBITDA in 9 months of current year stands at 180 crore as compared to 151 crore achieved in 9 months of financial year 21 with a growth of 19.1% YOY and 63 crore in quarter 3 of financial year 22. EBITDA margin have increased to 33% in 9 months of current financial year as compared to 29.1% achieved in the corresponding 9 months of last financial year. The PAT stood at 127 crore in 9 months of financial year 22 as compared to 108 crore achieved in 9 months of financial year 21. A growth of 18.1% on YOY basis and about 43 crore in quarter 3 of current financial year. PAT margin has also increased to 23.2% in 9 months as compared to 20.7% achieved in 9 months of financial year 21. The domestic revenue stood at 252 crore as compared to 191 crore achieved in last year, and export revenue stood at 280 crore as compared to 318 crore achieved in 9 months of last year. Revenue from technical and formulation stood at 386 crore and 147 crore during the 9 months of financial year 22. During the quarter, we have maintained net working capital cycle of 125 days, which has improved from 130 days in September 2021. Further, the board has revised the dividend policy of the company and has suggested a dividend payout ratio of 5 to 15% of profit after tax. We remain confident of continuing our growth trajectory while extending full support to our customers, supplier, and other valued shareholders. With this, we now hand over to Archit. Thank you very much.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. First question is from the line of Rohit Sinha from Sunidhi Securities. Please go ahead. Rohit Sinha, please go ahead with your question. Your line is unmuted.
Yeah, am I audible?
Yes, you are.
Yeah. So Thank you for taking my question. Just wanted to know, since we are having some capacity expansion and some of the products are new products are into the pipeline. So after completing these all expansion and new product addition, what sort of revenue visibility we have for, let's say, for next 2 years, and what would be the margin profile, considering that we are still pretty much at the higher end as of now. So going forward with these new capacity and new product additions, what sort of revenue target and margin profile will be looking at in the next 2-3 years?
Actually, we have a capex of 140 crore being spent in current. 70 crore is being spent in current year, and 70 crore is being spent in next year at our existing site. We are projecting asset turn of more than 2 times against this capex. So we are quite confident to achieve growth of around 20% in next 2 years. As far as our new capacity which is coming at our new plant, that will boost our revenue significantly, since we have projected a capex of 300 to 400 crore in next 3 to 4 years. As far as EBITDA margin profile is concerned, we are making niche products, so we are very much confident that our EBITDA margin will be in the range of 29 to 33% in future also.
Okay, that's helpful. And secondly, when we are adding capacity, I mean, what normally we take to reach up to the optimum utilization for these capacity, or is it? I mean, it varies differently for different products.
Anand, could you repeat the question, please? It is not clear.
Yeah, when we are adding capacity, then I would say that if we are adding capacity, when it is going to be commissioned, so how much time it will be taking to reach out to the optimum utilization?
It takes around 2 to 3 quarters to reach the optimum level, and stabilization of plant, it takes generally 2 to 3 quarters.
Okay. That's it from my side. I'll come back in. Thank you.
Thank you. Next question is from the line of Bharat Shah from ASK Investment Managers. Please go ahead.
Jain Saab, Gupta Saab, Namaskar.
Namaskar, sir.
Just wanted to revisit the business model again. Wanted to hear from you once again all the key levers of the business model in terms of the kind of R&D strength, kind of customer relationships, kind of operating leverage benefit, asset turn, and therefore the margins, and therefore the business model which kind of on a relentless basis drives a certain kind of a growth rate. So if you can spell it out again, we'll appreciate.
Sir, as you know very well that our major effort is on the R&D, and we have been working on molecules which have good potential, and we already have discussions with our customers, and based on their discussions we select the molecules. So we are not dependent upon the possibility of selling the product after we develop it, but before itself we are more or less in an agreement with the customer, so that at least they will take up more than 50% of our production. That is one of the criteria, that is a model which we have been following, and we are already in discussion with many of our existing customers as well as new customers for the product range, existing new products which are coming up in the coming 2 to 3 years. That is one thing. And number two, our R&D is doing very well, and we have already launched 2 products this quarter we will be launching, and 3 products which are remaining now would be launching in the next 2 quarters of financial year 23. And overall 8 products we had in pipeline. So these 8 products we would be adding at our Sandila unit, and then the remaining products which work is already going on, that we would be launching at our new site what we have taken at Hamirpur industrial area. And I think we are in the right direction, and we see a very clear visibility of retaining the margins, because we already work out the cost and discuss with the customers in advance.
Also, Jain Saab, what gives the confidence about margins? What Gupta ji mentioned, that minimum 29% margin that he referred to. What gives you confidence that, because 29% is a remarkable margin, and especially when asset turns are also reasonably at a efficient rate. So what gives us confidence about such margin?
Sir, because number one is that we are in the areas of some niche products. So there are not many producers around the world, and many of the products what we produce, we are the sole producer even in India, and even in the world we are maybe among the top 3. So there is always a good possibility of getting decent margin. And number two, because these multinational companies, they would like to have a reliable partner in India apart from China. So they don't mind giving us slightly better margin than Chinese product, because their dependability on us is much more reliable than the general Chinese suppliers. That is one of the reasons. And number two, we have the registration process itself takes a lot of time. So that is also one of the reasons that we can get a little better margin. Mr. Agarwal would like to add.
I just want to add that the product which we have recently launched, I just told that it got very good response even from China. Because Chinese people, they say that how could you produce this product, because only one or two people are making this product. So apart from what Mr. Jain has told, we are very particular about niche products, and what we see before producing this product, that our gross margin should be at least 50% of the sale. These are that's one or two things which we emphasize.
Agarwal Saab. And are we not being a bit unduly conservative when we are talking of 20% growth in top line for 2 years that Gupta ji referred to?
I just
Sir, 20% is a very modest estimate what Mr. Gupta ji has given us. I, as a technical person, I envisage a little more, but he wants to take a cautious approach.
Okay. Okay. Thank you, Jain sir.
Thank you. Thank you, sir. Thank you.
Thank you. Our next question is on the line of Rahul Jain from Credence Wealth. Please go ahead.
Hello. Thanks for the opportunity, and sir, congratulations on a good set of numbers.
Thank you, sir.
Sir, we appreciate that you've been having fantastic gross margins of more than 50% up. And even in this quarter, when some of the other companies which are into technical businesses, they have reported some fall in the margins, whereas we continue to improve our margins even in this quarter or in this current year. Like last 3 years till FY20, we were around 49.50, and current year FY21, 21 and 22, we are somewhere reaching around 55-56% margins. So Typically, sir, and this is in spite of the raw material prices going up in last 12 months or so. So what exactly are we trying to, or what is the different thing which we are doing which helps us to keep this kind of margins?
Sir, we, as reported last time also, we are optimizing in the processes what we are adopting and trying to optimize on product conversions, number one, and also the utility requirements. So based on these two parameters, we are able to optimize the process further so that our overall cost gets reduced. And number two, we have a better product mix this time, and that's why we are able to get slightly higher margins.
And sir, on the product side, two parts of that product side. One is the existing products where Captan, Folpate, and Pro Sulfocarb. These are our three top products. So, what kind of growth can we see in these three products going ahead? And any of this, you have mentioned in your presentations continuously for last 3 quarters that none of our products happen to be in the red category. But do you expect any of these products to get into a red category maybe 1 year down the lane, or say, 15 to 18 months, because these are very large products for us?
No, I don't think, sir, it will be in the red category, because red category products, normally they categorize it as red when the LD50 value is less than 50, whereas the LD50 value of these products are more than 2000 to 5000 ppm level. So these products getting into red category is very, very remote.
And with regard to
no yes, sir.
And with regard to new products, you have introduced 2 products in first half, and you had mentioned they in the size of 80 to 100 crores and 30-35 crores. You already introduced 1 more product in the previous quarter, and in initial remarks you spoke about further 3 products being launched. So typically, sir, the latest product which you have already launched in quarter 3, what is the size of that product, and the coming 3 products, what could be the size of those products?
This is the product what we have launched in this last quarter. The size is about 500 metric ton per annum, and it will generate a revenue of almost 50 crores.
And the next 3 products which are there?
Yeah, the next 2 products we are going to, one product we have already soft launched in January, and one more herbicide we are proposing to launch next month. That is one. And then we have 3 more products in pipeline. 2 of them are intermediates, and 1 is the technical product.
So what could be the size of these products?
The size of these products will be much bigger than this, sir. Much bigger than this.
And so one question with regards to our marketing expenses, not related to this quarter, but last 2-3 years, your marketing expenses have gone up from about 25 crores in FY19 to 34 crores in FY20 and 43 crores in FY21. So how is it in the current year? And given that, correct me if I'm wrong, we are increasing our proportion of technical sales, and we are also, initial remarks, we also talk about the contracts for the new product launches which are happening and which are going to happen in next 12 months further. So where do we see this marketing expenses? Why they are higher? And do we see this flattening out in terms of the marketing expenses?
Actually, the expenses which I think you are referring, it is a total expenses, other expenses of the company. It also includes power and fuel and freight also. So our marketing expenses have not gone up substantially, but these freight and fuel expenses have recently, they are on elevated level.
Okay. Well, I could see fuel different. This was basically selling and administration expenses, sir. So they are largely fixed in the nature, selling and administration expenses?
Yeah. No, actually, for our technical product, we do not have to employ a big marketing team. Since it is a B2B business, we are incurring mostly for our formulation business, which is growing at around 20 to 25%. That expense will also grow in that proportion only.
And last question, sir. In quarter two of the current year, you had some deferments in shipments with regards to sales, and also there were logistic issues. Are all those issues settled now, and have we can we see a better growth going forward with regards to this particular issue getting sorted out?
It has largely been sorted out, but still, say, earlier the problem was very much we were not getting containers for, say, many weeks. Now we are getting around after 1 week. So the situation has eased quite a bit.
Sure. And if I may just squeeze a small question with regards to our Hamirpur expansion, is the EC approval expected soon?
Yeah, we are already applying for that, and it will take about 4 to 6 months before we get the approval.
So it is not yet applied, sir?
Yes, sir. No, it is in the final stage because they require a lot of information. So when we log once, but then they require some more information, which we have already provided. So I think we maybe in another 1 month we should get this first stage, what we call it TOR stage. So that we should be able to get in another 1 month's time. And after getting TOR, it will take another 4 to 5 months for getting the approval, because 3 months we have to make studies and submit, and after submission it may take another 2 to 3 months for getting the approval.
Thank you so much, sir. Thanks for the detailed reply, and wish you all the best. In case of further questions, I'll come back. Thank you so much.
Thank you. Thank you.
Thank you. Next question is from the line of Bhavin Chheda from Enam Holdings. Please go ahead.
Yeah, good afternoon, sir, and to the management team for the excellent performance the company is doing in terms of existing as well as the products. A few questions. If you can share the number on the new product, which couple of new products which you said you launched in first half and one in this quarter, how much turnover they would have generated in first 9 months?
They are actually these product has been soft launch. These product has generated revenue of around 7 to 8% up to this 9 months period.
3 products, sir?
All the 3 products. Since we have launched in the 2 products at the end of the first quarter and 1 product in the third quarter, these products we have just soft launch. We are doing backward integration for these products. Then when backward integration capacity comes up, then we will launch in these products in full swing.
And so 7 to 8% of the technical sales or the total reported sales of the company?
Total reported sales of the company.
Okay. Yeah. The second question, you said the current capacity now is 21,000 tons, and I think you said 9,000 is getting further expanded to take it to 30,000, right? This is the existing 2 plants, and largely the expansion is happening at Tandila. So this
21,000.
Yeah.
Yeah. Sir, actually our capacity was 18,500 initially, 19,500, sorry, and we have added 1,500 tons of capacity during these 3 quarters, and the remaining 7,500 tons we will be adding in the coming 6 months.
7,000
technical grade. Yes. So total 9,000 tons increase we have envisaged.
Yeah. So from 21,000 further 7,500.
Yes.
To take it to 28,500.
28. Yes. Yes.
Okay. This 28,500, sir, would be completed by when, sir?
By another 6 months to second quarter, by the end of second quarter of this financial year. Next financial year, sorry.
So largely by H2 FY23.
Yes.
So your time. So by that time, Hamirpur approvals will come. So post that your Hamirpur expansion.
Yeah. Yeah, we will start working at Hamirpur later on. Yes.
And if you want to share, what is the capacity utilization or the volume run rate which you are doing in this quarter? Or 9 months, whatever number you have handy to share?
The capacity utilization has been around 60% this quarter.
Okay. Of 21,000?
Yes.
Okay. And first 9 months would be?
First 9 months also it will be in the same range, sir. It will be in the same range proportionately.
Okay, same.
Yeah.
And sir, optimum utilization you can do is 80-90%, right?
80% is not possible, sir, because there is a slightly seasonality is involved in these products. So 80-85% is not there. Maximum it can go up to 70-75%. Sometimes we achieve that also. So it is normally in that range.
And sir, my last question was this Kaptan capacity was planned under significant expansion.
Yes.
It was expected to be completed by February. So is that complete now?
Yeah, it is almost getting completed. It is on track. We had planned to complete it by February end and start increase the production trials by 1st of March. So it is on track.
Okay. And after this, what would be the capacity of Kaptan, sir?
Should we tell? Probably that will be too forward-looking statement, no?
No problem. No problem.
Because of the contract, that's why.
Yeah, no problem. And the other questions on the other division, one is the formulation. How is that division doing? Any new product or SKUs launched there, distribution network, if you want to update us on that?
Formulation, we are adding new products regularly, sir. Regularly we are keep on adding the new formulation, individual product as well as combination products. And we are increasing the number of depots what we have, because earlier we had 15, now we have more than 20 depots across India. And we are trying to increase our presence in more number of states. And we are growing because our technicals are also increasing, so we are introducing the formulations of our technical also.
And any formulations, sir, what kind of top line growth are you looking? It would be more than technicals, in line with technicals or a company. So because the base is too low, if I understand, you are around 150-160 crore run.
Yeah.
So the base is too low. So what kind of growth you are looking at formulation?
We are looking at around same 20% in line with our technical growth. So the ratio more or less remains same.
Sure. And one question for Mr. Gupta on the balance sheet side. What is the gross debt and cash number as on 31st December?
It is around 120 crore net of debt.
If you can give separately gross debt and cash numbers.
It is our gross debt is around 25 crore and cash is around 145 crore. Cash and cash equivalent, bank.
The net is around 150.
145 and 25.
Thanks a lot. Yeah, thanks a lot, sir.
Thank you. The next question is from the line of Jimesh Sanghvi from Jimesh & Company. Please go ahead.
Yeah, hi sir. Can you share the breakup in terms of exports and domestic? How is that? And with this new product launches, is it purely likely to be sold in the domestic market or it will be more export oriented?
Sir, our domestic sale for these 9 months have been about 252 crores and exports have been 280 crores. And the new products what we are launching, some of them are for Indian market as well as for export, and few of them are essentially for export.
So how should one look at margins out in the domestic market vis-a-vis the export market? Is it substantially different or how is that as a number? And
they are more or less same, sir. They are more or less same.
Okay. And these new products, will it have similar margins as the existing ones or it will be better margins on a relative basis?
So they will be more or less same range.
Okay. And sir, any risk in terms of raw material cost increases, or is it generally a pass-through for the company? How do we deal with the raw material cost basically?
Yes, raw material prices in the recent past there have been a lot of variations, but we are thankful to our customers that they are able to absorb this cost increase.
Okay. And also, can you share the names of some international players in the 2 or 3 key products wherein you are kind of the lead sole supplier in India? What are the names of those international players, if you can share that?
Yeah, in one of our fungicides, the major international player is a company by name Adama.
Okay.
Yeah.
And any other, like, because there are 3 products, right? Your Captan, Folpet and Thiocarbonate. These are the 3 products wherein you are the sole supplier. So can you share for each of these 3 segments the names of any international players out there?
The Captan and Folpet, both Adama is our major internationally the major competitor. And China, we have very small producers in China.
Okay.
Yes.
And what part of our revenue will be contributed by these 3 product segments, Captan, Folpet and Thiocarbonate?
It will be around 40-45%, sir.
40-45%. And how is this particular segment growing in terms of overall growth?
It is growing very well, because even in Europe, the market size is increasing year by year.
But any number that you can share, sir, out here? Like, is it growing at 10% as a market overall, or 5%? If you have any number of that sort, or any historical trend?
Our estimate is it should increase by at least 10%.
Okay. And how easy it is to develop similar products as yours? What could be the kind of entry barriers which could be there in these product segments that we are catering to?
Sir, the entry barrier, sir, it is number 1 is the technology. Number 1 is the availability of the special facilities required for these products, because these require very special handling of 2 hazardous chemicals, which we have developed over the last so many years. And number 3, that we have a long-term contract with our customers. So anybody entering there, it's not easy. And because the registration process, it takes 3 to 4 years, and it is a very costly affair.
So I'm just trying to understand this. Probably if you can share some more light, just from the basic thought process, that if you are making something like a 30% margin, why will others not try and do the business? Because there are a lot of players in this particular business segment with various products and things. So what keeps us kind of different vis-a-vis the others? If you can give some more details on that, if that would be very helpful, sir.
So normally, all these products what we make from very basic chemicals. We are fully backward integrated for these products. So that is why the setup is quite large to make this. And for anybody to make, it requires a lot of efforts on that count. And number 2 is the niche technology what we have developed over the years, so that we can optimize on the overall yields and production cost.
So these technologies are kind of patented or something of that sort, or made indigenously out here?
We have made indigenously out of our own R&D, sir. These are all products, whatever products we are presently selling, all the technicals, they are all based on the research and development team effort. And they have developed the process, and then we have done the scale up, and then we have done our own project engineering on this, and the plant has been erected.
Thank you. Mr. Sanghi, request to join the queue for any follow-ups. Thank you. The next question is on the line of Vishal Biraya from Max Life Insurance. Please go ahead.
Hello. Sir, what will be the extent of backward integration for Petila-chlor and diafenthrin?
Sir, it will be from the very basic stage, sir. It will be from the very basic stage for Petila-chlor. It will be that one of the intermediates normally is being produced only in China. People get only that. We will be producing that intermediate, and also the raw material required for that intermediate also. So we would be the first company to have the full backward integrated production of this product.
Okay. And what will be this raw material that you will start with?
Raw material is one material is diethyl aniline, and another material is propoxyethyl chloride, I think, if I am not wrong.
Okay.
Technical team will be able to give you much better answer on this. Yes, sir.
So could you name these products again, and will these products be your starting materials?
Yes, diethyl aniline would be our starting material.
Okay. And where could you get this material from?
We can get in India, sir. In India, there are a few companies who make this material, and we have already tied up with them, and they have agreed to supply us this material. And also there is, we can source it from outside India also.
Okay. And after you get this raw material, after how many processes will you get the final product? I mean, I'm trying to understand as to how complex is manufacturing of Petila-chlor and diafenthrin.
It will be, sir, at least 4 to 5 stages to get the finished product.
Okay. And currently, what is the import content of these two products, Petila-chlor and diafenthrin?
So what we are making now, when we will be making the imported component would be less than 15%.
So when you start making it, your import content will be only 15%.
Yeah.
Okay. And what is the competitive scenario in these two products?
The competitive scenario, sir, because from this basic stage, I don't think there are many players. I think we would be the first to have from these basic stages.
Okay. So if you take Petila-chlor as an example, what will be the differential between if you import it from China, what will be the landed cost, and when you make it, what should be the cost? What will be that differential?
Sir, we would be cheaper than what it is being imported presently from China. Certainly, we would be cheaper, and we would be able to make these intermediates ourselves. So we would be fulfilling the aim of our Prime Minister, Atmanirbhar Bharat. So that we will certainly contribute to that extent.
So if you consider the current prices, then how much cheaper would you be?
So that is very difficult to tell now, but certainly it will be cheaper. Certainly we would be cheaper, much cheaper.
Okay. So you would at least be able to make 15-20% margin. That would be the ideal margin that you would make on these products, or what would be your target margin?
Certainly. That has been our basic benchmark.
Oh, okay. So let me put it the other way. What is your target margin on these products?
Around 30%.
30%.
Yes.
And you expect this 30% margin to sustain?
That's what we feel.
Okay. So in general, this is the last question. I mean, we've seen that the traditionally margins in this kind of a business range between 15 to 18%, and it's been more than a year that your margins, more than 8 quarters, I guess, that your margins have sustained about 25%. So how long do you think this will take before they revert back to 15-18% kind of levels?
Sir, we wish that we should never return to 18% level. We want to keep always around this level only. And we make all our efforts to maintain these margins.
अच्छा सर, तो ये आपको नहीं लगता सर कि इसमें कंपटीशन आ जाएगी और फिर थोड़ा इम्पैक्ट हो सकता है? तो जो बहुत सारे लोग मल्टीपर्पज प्लांट्स लगा रहे हैं और वो मल्टीपर्पज प्लांट्स ये प्रोडक्ट्स के लिए फाइन ट्यून होके ये प्रोडक्ट्स आ सकते हैं।
जी सर, बना सकते हैं सर। ऐसा है ना कि बहुत सारे लोग बना रहे हैं, लेकिन इतनी बेसिक स्टेज से कोई नहीं बना रहा है। तो और ये कॉम्प्लेक्स केमिस्ट्री है थोड़ी सी विद सम एक्सट्रीम कंडीशंस, so everybody will not be able to make the required lot of infrastructure and lot of technical expertise to make these products. It is not very easy to make these. People normally they import N-1 like of product and then they produce the last stage only in a sterile reactor.
Okay. सर ये पेटिला क्लोर जो है वो एक हर्बिसाइड है, तो उसकी हैंडलिंग जो है उसका कंटामिनेशन का रिस्क दूसरे प्रोडक्ट्स पे नहीं आएगा? बिकॉज
सर हमारे पास जो है हर्बिसाइड सेक्शन और एक फंजीसाइड सेक्शन बिल्कुल सेपरेट किया हुआ है, सेपरेटेड बाय ए वॉल। वहाँ के आदमी इधर नहीं आते, इधर के आदमी उधर नहीं जाते हैं। ये टोटली बिल्कुल सेपरेट प्लांट किया हुआ है, क्योंकि हमारे पास हर्बिसाइड के भी एक प्रोडक्ट नहीं है, 5-6 प्रोडक्ट हो गए। So there is a more or less it is a combination of 2 plants, you can say. With the herbicide section is entry, even the entry is separate and the manpower is separate.
Okay. Thank you, sir. I'll get back in the queue. Thank you very much.
Thank you.
Thank you. The next question is from the line of Sandeep Bansal from ASK Investment Managers. Please go ahead.
Yeah, hello sir. Thank you for the opportunity. So my first question was, is the revenue growth this quarter in line with our expectation? The reason to ask is twofold. One is, we've seen good cost inflation, which we've passed through. And secondly, I think, there was some revenue which might have shifted from last quarter to this quarter due to logistic challenges.
Actually, the third quarter revenue is slightly less than the first half average. So the passover of the deferment of last quarter has contributed. Even for this quarter, we have because of some logistic issue, we have some order has to be shipped in January only. But the earlier, say, the delay was 2 to 3 weeks. Now it has come down to one week or 10 days delay in arranging the container. And our technical growth has been in as per what we have projected. But in case of formulation, there was slight, due to some difficulty, slight dip as per our projection in Q3.
Okay, sir. And sir, any new customer that we've added in the technicals business in this quarter?
The new technical, we are selling to our new customers, mainly to our new customers.
Yeah, we have added, sir. All the new products, no, we are adding new customers only. And we are also in discussion with many more new customers for our future products also.
Sir, any new name that we would have added in the top 10 global MNCs?
Global MNCs we have, no, Syngenta is our customer. And Syngenta is there, Arama is there, UPL is there. There are so many, sir. Essenza is there.
Right. Right. Sir, is there any conflict which exists due to our technicals and formulations business from a customer standpoint?
From custom standpoint?
From a customer standpoint, from a client perspective.
Customer standpoint, not sir, not very much. No, we don't have any conflict information from any of our customers.
So the products we keep are completely different.
The products we keep are slightly different, and even in export, normally we do B2B business. We are not in direct sale of the product. We don't do B2C business in our technical. Normally we do only B2B. So there is no conflict at all.
Sure. And so my last question is that, for our Hamirpur facility, since it's a large facility, and also the fact that it takes, let's say, a few years for a registration to come by, we would be having a number of new products over there. So obviously, the construction of the facility will itself take some time once the EC approvals, etc. happen.
Yes.
But would we start the registration process for the new products soon, or we would have already started? Or, if you can just share your thoughts.
We have already started the registration process for a few of the technical what we envisage we intend to produce at our Hamirpur site. That registration process with Central Insecticide Board has already started, number one. And parallelly, we have already started the application for the environmental clearance. So both the activities are going on parallelly. And what we will do that by the time we get the technical registrations, we would go first for some intermediates, because intermediates mean we don't have to depend upon the technical registrations. So we can go ahead with intermediates first, and by the time we get the technical registration, then we can go for technical production. This is how we have planned to save on the time.
Okay. So you said that the EC approval would take, let's say, around 6 to 9 months.
Yeah.
Then maybe another year or so for construction. So the first production we should expect will come only from FY25 at the earliest.
FY24. No, intermediate we will produce in the second quarter of financial year 2024.
Yeah.
It will take only 6 to 9 months to produce intermediates.
In between, we would be able to make all the infrastructure required, no sir. So that we would be doing parallelly.
Okay. But sir, sorry to harp on this point again, because of a lack of proper understanding. But let's say you start manufacturing intermediates, that's fine. But let's say if the full plant construction is with the EC approvals, etc., takes 2 years. Won't we have to start the process of registrations, let's say from now onwards, or from here onwards till, let's say, the next 1 year or so? Or we can continue with the intermediate manufacturing for another year before we start technicals over there?
Sir, because registration for technicals we have already started. Because with the Central Insecticide Board, sometimes it takes 1 year, sometimes it is slightly less, sometimes it takes a little more than 1 year. So we have already started the registration, and just to be a little safer, we intend to start the intermediates first, and then by the time we should be able to get the registration for the technical also.
Sure. Okay. Thank you so much, sir, and all the best.
Thank you.
Thank you. Our next question is from the line of Karthikeyan from Suyash Advisors. Please go ahead.
Yeah, sir, good afternoon. Couple of things. One is when all these 8 products are launched, so let's say in FY24, what would be the revenue contribution likely from these products? And second part is you said 2 of these products are intermediate. So what applications are these for? Are these for entirely captive purpose, or would there be any third party sale also?
Sir, it will be the intermediates what we have launched. We would be using captively also, as well as we will be able to sell in the market also, because these intermediates are presently imported. And number two, we will be doing the capex at our Sandila unit now at 70 crores this year and 70 crores next year. It will be about 140 crores, and we expect an asset turn of 2 to 2.25. So accordingly, the revenue will increase.
Sure. Thanks for answering, sir. Thank you.
Thank you.
Thank you. The next question is from the line of Pritesh Vora from Mission Holdings. Please go ahead.
Sir, I want to understand the Hamirpur, what kind of capacity we are putting in Hamirpur?
Sir, the capacity initially what we have applied for EC clearance is 30,000 tons per annum, and we will be putting this capacity in modular way. We will not put all the capacity at a time. We would be putting one block and another block like that. We will be adding, and 2 to 3 years we will achieve that capacity.
So do we have already identified product which we will manufacture at that facility for 30,000 tons?
Yeah, we have already identified them. We have identified a lot of products much more, and we would be working on that, certainly.
So, sir, your present capacity is around 18,000 tons, and you are expanding around 7,000 tons more, right, presently?
Yes.
Yeah.
So presently, at the Sandila unit, we are expanding by about 9,000 tons from the present capacity of 18,500, 19,500. So it will be 28,500 total capacity at our Sandila unit.
Right, but it will take 2 years to come up, right?
This will be by this year itself, it will come. This financial year 23, it will come.
No, but your 8,500 tons capacity, which you have said, which will come in Sandila, it will take 2 years to come up the facility, right? In 2 phases.
So 2 years, sir. It was financial year 22 and financial year 23. In these 2 years, what we mean. We already spent almost 60 crores at our Sandila unit. Already we have spent till now. And another 10-12 crores we will be spending by March end. And then another 70 crores in the
8,500 tons will come by which year?
The next year, the financial year 23.
So that will start in Q2, is it?
Yes.
Okay. So can we assume that our revenue will increase by, because the capacity is coming by 50%, can we assume the revenue also will increase by 50%?
In 2 years' time.
Yeah, in 2 years' time, yes, sir. Because it takes some time to stabilize. So probably by next year it should. Yeah.
All right, sir. Thank you very much.
Thank you, sir.
Thank you. Our next question is from the line of Anand from AS Capital. Please go ahead.
Hello, am I audible?
Yes, you are.
Yes, sir.
Sir, you had mentioned the 3 products where Adama is the competitor. Like
Yeah.
Adama is an Israeli company. Now, like what kind of market share we have in these 3 products? Like where they manufacture from, and like our cost will be lesser than them, so we can get more market share, sir. Is that possible?
Sir, we are the number 2 in the world, and Adama, we are more or less equal to Adama's capacity, what we feel. Exact capacity we don't know of Adama's, but what we feel from our market information, that we are almost equal to them in one of the products, and one product they may be little more, but we are the second one.
Okay.
And number 2, Adama is also our customer. They are buying from us.
The same product, sir?
One product they are buying from us.
Okay.
Yeah.
Okay. Sir, and the second thing you have mentioned that our total capacity will go to 28,500.
Yes.
So, metric tons, sir. Now you have mentioned that 70 crore capex this year and 70 crore capex next year.
Yeah.
So with the 70 crore capex this year, it will go to 28,500. And next year, when we do capex, will it increase further, sir?
No. Sir, this 28,500 we will achieve after spending this 70 crores for the next year.
Okay.
Yeah.
And all these newer products that we are launching, So are we completely, all these products, they are completely backward integrated? Like we are planning to integrate fully, like for all the newer products also?
Yeah, we that is our basic philosophy, sir. We want to start with the basic chemicals.
And sir, 10% of the sales is coming from API segment. Like which segment do they cater to, and like is there any plan to scale that also? Like
So, see, these APIs are in the dermal section, sir, dermal applications, and they are going quite well.
okay. And like, are we adding capacities or new products on this section, or like what is the plan here?
We would be doing at our Hamirpur site, sir. There also we have shortlisted few products, and that we would be doing at our Hamirpur facility. Presently, here at our facility, there is no space available now.
Okay, sir. Thanks a lot. My questions have been answered.
Thank you. Thank you very much.
Thank you. The next question is from the line of Bharat Shah from ASK Investment Managers. Please go ahead.
Jain sir, just to revisit on the business model. So as we've discussed earlier and now, the focus is on niche products, ensuring that we have scale economy there, contracts ahead of manufacturing so that there is no uncertainty in the business. Backward integration starting from key starting materials so that margin advantage, and as operating leverage kicks in, that further helps margins.
Yeah.
One integral piece of the superior asset turn, what are some of the strategic advantages we have in order to generate superior asset turns of the kind that we do?
Sir, as I explained to you earlier also, sometimes we have mentioned that we are doing our own technology development, number one, and we are doing the pilot plant as well as the complete plant erection by our own team. That is how we are able to get little cost advantage and integrate the product well. That is one of the key criteria what we are doing.
And I suppose the product selection also is such which the kind of margin that we are seeking, and the selection being such that it facilitates superior asset turn.
Yes, sir. Yes, sir. Absolutely.
Sure. And these are typically swing facilities, or these are very product-specific plants?
We have product-specific plants, sir. We have product-specific plants, and if the product does, there is a problem, then we can change over once for all to other products also.
Okay. With some amount of re-engineering.
With some slight re-engineering if required, then we can change over once for all. But normally we don't want to produce multiple products in the same plant because of the contamination issues. With some companies, what they do, they make products on campaign basis. That we don't do. We do exclusively in one plant product.
Right. But if required, plant can be re-engineered to make something else. Plant will not go waste if particular product for some reason is not in demand.
Yes, sir. Absolutely.
Okay. Thank you, sir.
Thank you, sir.
Thank you. Ladies and gentlemen, that would be our last question for today. I now hand the conference over to Mr. Anand Agarwal, Chairman, for closing comments. Thank you, and over to you, sir.
Thank you very much, and we have got very comprehensive discussion, and I thank you everybody. Thank you very much.
Thank you very much. Ladies and gentlemen, on behalf of Dolat Capital, that concludes this conference. Thank you all for joining us, and you may now disconnect your lines. Thank you.